Did you know that a new banking regulation was quietly approved in California literally overnight, and it could affect your money as early as this week? That's right. No media buzz, no big announcement, but this single rule could limit how you access your own cash, flag your everyday transactions as suspicious, or even trigger unexpected fees. And if you think this only applies to people living in California, think again. This might just be the beginning of a nationwide shift. Imagine waking up to find your bank account frozen, or seeing a simple transfer to your family marked as a compliance issue. Sound extreme? Financial experts are already warning that this new rule could change how everyday banking works, from peer-to-peer apps like Venmo and Zelle to how quickly you can withdraw emergency funds. And the scariest part? Why most people have no idea it's coming. If you care about your hard-earned money and financial freedom, hit that subscribe button now. This channel is your watchdog, breaking down complex money news in simple terms so you're never caught off guard. Number 1. Instant access to your own money could be blocked without warning. Let's start with something most of us take for granted: instant access to our money. Whether it's pulling cash from an ATM, transferring funds to a friend, or paying for something online, we expect it to happen right now. But under the new California banking rule, that instant access could soon become a thing of the past, at least for certain accounts. According to early reports and insider leaks, banks may now have the authority to delay or limit withdrawals, especially for larger transactions or accounts flagged for review. And here's the catch: these flags don't require you to commit any fraud. Unusual spending patterns, sudden transfers, or even receiving money from multiple sources could be enough to trigger a temporary freeze. That means your paycheck, rent payment, or emergency fund could be stuck in digital limbo when you need it the most. Why is this happening? Regulators say it's about increasing security and fighting financial crimes, but critics argue it's just another way for big banks to tighten their grip, leaving regular people to deal with the consequences. Imagine standing in a grocery store trying to buy medicine or baby formula, and your payment is declined because of an automated flag you never knew existed. Scary, right? So, what can you do? Start by keeping a financial buffer in more than one place, like a second checking account or a trusted digital wallet. That way, if one is frozen, you're not completely locked out. And if you're finding this information helpful so far, don't forget to hit that subscribe button. We're just getting started, and the next few reasons might shock you even more. Stay informed, stay protected. Number 2, peer-to-peer apps like Venmo, Zelle, and Cash App may come under fire. Let's talk about the apps we all use daily: Venmo, Zelle, Cash App. Fast, simple, and convenient. You probably use them to split a dinner bill, send rent to a roommate, or pay your barber. But under California's new banking rule, these platforms might no longer be the free pass they once were. In fact, they could soon become high surveillance zones for your transactions. The rule introduces stricter reporting requirements for digital payments. That means sending or receiving money through these apps could now trigger automatic alerts to regulatory agencies, especially if amounts cross new, lower thresholds. We're not talking about $10,000 transfers anymore. In some cases, even a few $100s between friends or family could be flagged for review. Financial watchdogs claim this move is to stop fraud, scams, and money laundering. But let's be honest, it's you, the everyday user, who will feel the pressure. Imagine sending your friend $300 for concert tickets only to have the app freeze the payment or delay it because it needs to be reviewed. Or worse, you receive money from multiple people. Say you're running a side hustle and your account gets restricted for suspicious activity. The real danger? You might not even know it's happening until it's too late. There's no big red warning sign, just a quiet hold and a wave of frustration. What can you do right now? Keep your transactions labeled clearly. If you're running a small business or side gig, consider switching to a dedicated business payment platform to avoid unnecessary scrutiny. Artumpink. And hey, if you didn't know this could happen, that's exactly why you should hit that subscribe button. We're breaking down what the mainstream media isn't telling you, and protecting your money starts with staying informed. Number 3, joint accounts could turn into legal landmines. Joint accounts are usually built on trust between spouses, business partners, or family members. You open one to simplify things: paying bills, managing shared expenses, or running a small family-owned business. But with the new California banking rule, what once made life easier could now become a legal nightmare. Here's what's changing. Under this rule, banks may begin reevaluating who legally owns the funds in joint accounts. That means if there's any unusual activity, disagreement between account holders, or external investigation, even unrelated to you, your access to those funds could be delayed, restricted, or even frozen. Imagine your partner is being audited or flagged for suspicious activity, and suddenly your money is no longer available when you need it. What's worse? In some cases, banks may require both parties to approve certain withdrawals, especially if the account hits specific compliance triggers. That can be a real issue if one person is traveling, unreachable, or unwilling to cooperate. It sounds like something out of a courtroom drama, but it's real, and it's already being reported in early cases tied to this new rule. If you rely on a joint account, now is the time to review your agreements. Consider separating emergency funds or setting up account alerts to stay ahead of any changes in status. Don't wait until your account is locked during a crisis. And if this is the first time you're hearing about this, you're not alone. That's why subscribing to this channel could be one of the smartest financial decisions you make today. We dig deep so you don't get blindsided. Number 4, automatic reporting to federal agencies is about to get easier. Here's where things get a little uncomfortable. Under the new California rule, banks and financial platforms may be required to automatically report your transactions to federal agencies, even when there's no crime, no fraud, and no red flag, just your regular financial activity. In the past, banks only flagged transactions above $10,000, but now that threshold could drop significantly lower depending on how the rule is implemented. Some insiders suggest amounts as low as $600 might soon be fair game for government reporting, especially for digital payments. That means sending money to a friend, receiving a freelance payment, or even buying a used couch online could put your name on a government watch list. Sounds extreme? Maybe. But this isn't speculation. It's already happening with tax reporting rules through platforms like PayPal and Venmo. Now, this new banking rule could expand the scope, making it even easier for your everyday transactions to be monitored, quietly, automatically, and without your permission. Why does this matter? Because it creates a system where everyone is treated as suspicious by default. Your money movements, your personal payments, all up for review even if you're just helping out a friend or covering groceries. So what should you do? Start keeping better records of your payments. Add clear notes or memos when sending or receiving money. Transparency may protect you if a transaction ever comes into question. If this opened your eyes, don't just scroll past, subscribe now. This is the kind of critical info most people won't hear until it's too late. And if you care about financial privacy, you're going to want to hear what's coming next. Number 5, small businesses could face cash flow chaos. If you run a small business, side hustle, or even a freelance gig, pay close attention. The new California banking rule isn't just targeting individuals. It's already causing a ripple effect across small and medium-sized businesses that depend on daily cash flow to stay alive. Under this new rule, business accounts, especially those flagged as high risk or with frequent incoming payments, may be required to meet stricter compliance standards. Translation: banks might begin holding your incoming payments for longer periods, request extra verification, or even freeze funds temporarily if they feel something looks off. Now imagine running a local bakery, online store, or car detailing business, and your revenue from the weekend gets delayed or blocked. How do you pay for ingredients, restock inventory, or handle payroll on Monday? This kind of hold can completely throw off your operations, especially for businesses that rely on quick turnarounds and same-day reinvestments. It's not just about red tape, it's about survival, and unfortunately, most business owners have no idea this rule is now active, or how fast it could hit their bottom line. So, what can you do? If you're a business owner, contact your bank immediately. Ask how this new rule affects your specific account type. You may need to switch to a business-specific account or separate personal and professional finances entirely to avoid unnecessary holds. If you're a business owner, or you know someone who is, make sure to subscribe. We're here to help you stay ahead of policies that could impact your future. One rule shouldn't be allowed to crush hardworking entrepreneurs, and the more you know, the stronger your defense is. Number 6, banks may freeze suspicious activity faster than ever. Imagine checking your account and seeing a message that says, access restricted, under review. You didn't do anything wrong. No fraud, no shady behavior. Maybe you just transferred money to a friend late at night or received a few payments from clients. But under this new California banking rule, that might be all it takes to have your account flagged and frozen. Here's why. The regulation gives banks more flexibility to act on unusual activity, and thanks to advanced AI and behavioral algorithms, your account could be automatically analyzed and restricted, in real time. The issue? These systems often don't understand context. A last-minute hotel booking, a sudden large payment, or sending money overseas to a relative could easily trigger an alert. This isn't just a theory. Banks have already been testing automated monitoring tools to catch fraud faster. But with this new rule, they may now have more power to act immediately without first notifying you. That means your money gets locked, and the burden of proving your innocence falls on you. What's worse? These freezes could take days to resolve, especially if your transaction is flagged over a weekend or holiday. Now think about the impact. Missing rent, being unable to buy medicine, or losing a business deal, all because of a false alarm. So how can you protect yourself? Notify your bank before making large or unusual transfers. Keep payment notes clear and accurate. And most importantly, diversify. Don't keep all your money in one account. If this made you feel even a little uneasy, hit that subscribe button right now. Because in the next segment, we're revealing how this rule could go far beyond California and affect you, no matter where you live. Number 7, California might just be the beginning. You might be thinking, this is only happening in California. I'm safe. But here's the reality. California has a long history of setting trends that the rest of the country soon follows, especially when it comes to laws and regulations. Remember when California introduced stricter car emissions laws? Within a few years, those same standards started spreading to other states. The same thing happened with data privacy, gig economy laws, and minimum wage hikes. Now, experts are warning, this new banking rule might follow the exact same path, becoming the blueprint for other states or even a national mandate. And here's why that matters. If you wait until your own state adopts a similar law, it could be too late to adjust. Banks won't give you weeks of warning. The shift could happen overnight, just like it did in California, and you'll wake up to new rules, new limits, and less control over your money. This is especially concerning for people who use digital banks, online-only accounts, or nationwide banking apps. Even if your bank isn't based in California, it might adopt these changes internally to avoid future compliance issues across states. So what should you do now? Stay informed, follow trusted financial news, ask your bank what changes they're making, and most importantly, start preparing as if these rules could hit your account next. If you're outside California, you're not in the clear, you're in the waiting line. So don't miss what's coming next. Hit subscribe and turn on notifications because we're breaking it all down step by step before it hits your doorstep. Number 8, new hidden fees could be slipped into your account. Let's be real, banks don't always announce fees loudly. In fact, they often tuck them away in the fine print, quietly added to your statement when you're least expecting it. And with California's new banking rule increasing compliance costs, banks may soon look for subtle ways to make up the difference. And guess who's likely to pay for it? You, the customer. Early leaks suggest that some banks are preparing to introduce things like security maintenance fees, transaction review charges, or compliance handling fees. These are brand new, vague-sounding fees that could be added to your monthly service costs. Sometimes just a few dollars, sometimes more. And if you're not watching closely, they'll chip away at your balance month after month. And here's the trick. Banks often label these fees in ways that sound necessary or technical, making it easy to overlook them. You might see a $6 charge and think, oh, maybe that's just a service fee, without realizing it's a direct result of a new policy you were never properly warned about. This is especially dangerous for people living paycheck to paycheck. Imagine losing $10 or $15 each month to fees you didn't even approve. That's grocery money, gas money, or your phone bill right there. So what should you do? Start by reviewing your bank statements every month, line by line. If you see a new fee, call your bank and ask about it. Don't assume it's valid. And consider switching to banks or credit unions that offer transparent, fee-free services. If this shocked you, or if you've already seen strange charges on your account, hit that subscribe button right now. You deserve to know the truth before your money starts disappearing in plain sight. Number 9, your account could be closed without warning. Imagine waking up, opening your banking app and seeing "your account has been closed" message. No warning, no explanation, just gone. Unfortunately, under California's new banking rule, this nightmare could become a real possibility for more people, especially those who don't fit the standard banking profile. Here's how it works. The new rule allows banks to take stricter action against accounts they deem non-compliant or risky. And the scariest part, That decision can be automatic. Maybe you receive multiple payments from different people. Like if you're a freelancer or run a side hustle, maybe you frequently send money overseas to support family, or maybe you simply withdraw large cash amounts more often than others. All of this could now be red flagged as suspicious, even when it's totally legitimate. Banks are under pressure to reduce their liability, so rather than reach out or investigate further, they might choose the faster route, shutting down your account altogether. No refund delays, no second chances, your direct deposits blocked, your savings frozen until further notice, your access to essential funds completely cut off. And while big businesses have legal teams to fix this kind of issue in days, the average person could spend weeks or even months trying to reopen access, often with no guarantee of success. So what can you do? First, avoid mixing personal and business transactions in one account. Keep records of your transfers and, if possible, set up backup banking options, like a secondary account at a credit union or online bank. If this made your heart race a little, you're not alone. These rules could impact anyone, anytime. Subscribe now so you're never blindsided, and help others stay ahead by sharing this video with someone who needs to hear it. Number 10, your emergency funds might be locked when you need them most. You've been responsible. You've saved up for a rainy day just in case life throws you a curveball, a medical emergency, sudden car repairs, a family crisis. But under California's new banking rule, even your emergency savings might not be instantly accessible when you need them most. And that's a reality no one's talking about. Here's why. The rule allows banks to delay or restrict large outgoing transfers if they're deemed irregular or require further review. That includes moving money between your own accounts, even if it's your money. So imagine being in an urgent situation, trying to move $5,000 from savings to checking, only to see transfer on hold under compliance review. That hold could last 24 to 72 hours, or longer if it happens over a weekend or holiday. And while you're waiting, your crisis doesn't pause. The hospital bill is still due. The flight to see your sick parent still needs booking. The car you rely on still needs fixing. This isn't about being careless. It's about a system that now puts bank protocol above your personal emergency. It's one of the most frustrating and dangerous consequences of the rule, especially for people who don't keep cash at home or rely solely on digital banking. So what can you do? Consider keeping a portion of your emergency fund in a more accessible format, like a local credit union, a separate account with lower oversight, or even a small amount in physical cash, safely stored. Preparation is no longer optional, it's necessary. If you've made it this far, it means you care about protecting your future. Hit subscribe to stay one step ahead of the system. We're here to break down the rules that others ignore, because you deserve to be in control of your money, not the other way around. Now that we've uncovered these 10 urgent reasons why California's new banking rule matters, one thing should be crystal clear. This isn't just a local issue. It's the start of a financial shift that could impact millions of people, including you, whether you live in California or not. From frozen accounts and unexpected holds to increased surveillance and quietly added fees, this rule is reshaping how banks operate and how much control we really have over our own money. And the scariest part, most people have no idea this is happening. They're going about their daily lives completely unaware that their financial freedom is quietly being chipped away. But you're different. You stay to the end, which means you're someone who wants to be informed, prepared, and one step ahead. And that's exactly why we created this channel. Not to scare you, but to empower you, to give you the knowledge that banks and bureaucracies won't hand you willingly. So what can you do next? Start by reviewing your accounts, ask questions, stay vigilant, and most importantly, never keep all your eggs in one basket. Diversify your banking, keep backup options, and always read the fine print, especially when new rules quietly take effect. But don't stop there. Let's turn this knowledge into a community. If you found this video helpful, please give it a thumbs up and share it with at least one person you care about. Your friends, your family, your coworkers. They deserve to know what's changing behind the scenes too. And if you haven't already, subscribe now and turn on notifications. We've got more eye-opening content coming your way. Simplified, verified, and made just for people like you who don't want to get left behind. This isn't fear, this is financial awareness, and it's the strongest currency you can carry in today's world.